it's no surprise that markets are set to close lower as the government remains deadlocked over the debt ceiling. Meanwhile, volatility has jumped to its highest level in 4 months. Now we're joined by Derek Orth of Brendan E. Crine. Derek, we saw some of the tech stocks, Yahoo, Facebook, fall heavily today. Is there any reason for those falls that we've seen in the tech sector? Any short selling is closing out their positions?
Well, I think in general, overall in the tech sector, you just have some profit taking because there's been a pretty good run in the tech sector over the last few months, and it's all related to the debt ceiling issue going on in Washington. Every sector is pretty much getting hurt pretty good today, and trading range wise, 1660 right at the level we're at now is a bottom I've been looking at for this range, for this kind of uncertainty. We broke 1690 a while back ago when this first started this issue came up with the debt ceiling. And we've kind of gotten to this point here where I'm watching this level for maybe some stability until we get maybe hopefully some developments over the next few days in Washington where we will fluctuate right here and kind of trade in a sideways pattern until we get some sort of resolution out of Washington.
Okay. Now the VIX is at its highest level since about June. Is that likely to keep picking up until we approach the debt ceiling next week?
Yeah, well, being that we are at this level in the S&P 500 here and the spike in the VIX, I think you are seeing investors putting on some insurance with buying the VIX here. And if you'll see it spike if we start breaking underneath this level and closing under 1660 for a number of days, you'll see the VIX keep spiking. But I think we'll see what happens at this point here. But I think going forward, I think we're still going to be kind of sideways maybe, and we're a little bit oversold right at this moment now, so I'm anticipating some sort of rally.
So when you say oversold, some strategists are suggesting that that valuations are overstretched. You don't necessarily agree with that?
No, because I use technical analysis for my observations, and basically the run I've been seeing stocks in and the pullbacks that they're in some of the individual stocks have been having, I witness a little bit of, let's say, it's called bullish divergence with an oscillator in price where you're kind of looking at a price point where you're having some selling and you kind of get maybe like 2 or 3 signals in a row where your oscillator that you're watching is giving a higher price point than the actual falling price. So it's kind of a technical term, but on a short-term trading aspect, it's usually a good signal just for oversold rally to maybe a little bit of bounce.
Okay, thank you, Derek. That was Derek Orth of Brendan E. Crine, and I'm Jane Searle for The Street.